Hey all, today I'm going to go in depth and review whether the housing market is about to crash. I'm going to review both sides of the argument, so whether the market is going to crash and also whether the market isn't. I'll also be giving different perspectives from estate agents and house builders as well. I'll also be sure to put the timestamp down below in the description so you can fast forward or change to the bits that you want to see most. But before we get into the video, I need you, yes you right there staring at the screen, I need you to make sure you've liked the video and subscribe to the channel if you haven't already. Now let's get into the video. So let's start with why the market is going to crash. Oh, house prices are going to fall. We're going to lose money. Negative equity. Oh, it all sounds so bad. Back in 2007 to 2008, the new adjustable variable rate mortgages all kicked in. This caused mortgage rates to go from 2% up to 5% after their teaser period expired. This caused millions of people to lose their home because they couldn't keep up with their mortgage repayments. That caused a massive oversupply from people putting their houses on the market. 2008 was also the time of the subprime mortgage crisis. This left a lot of lenders with very little funds, which meant that there just weren't many mortgage products to go around. They were also taking some of their riskier products off the shelf, such as the 100% or no deposit mortgages and the ninja loans, which is no income, no job at all. That obviously left people just not being able to get loans and caused a massive reduction in demand for buying houses as well. This massive oversupply in the housing stock available, met with the reduction in demand caused by the lack of loans available, is effectively what caused the housing market to fall. The price of pretty much all products depends on this supply and demand ratio. Although I will caveat that and say that there are some other things that can affect the prices, such as environmental matters, legal matters, and natural disasters. This ratio controls the price of products because, for example, if the demand for something is really high, but the available supply for that is really low or limited, take diamonds for example, the price is going to be really high. Another example might be a really rare supercar, like the Koenigsegg Agera 1:1. The supply is really low because only 7 were made, but the demand is really high and therefore that car is ridiculously expensive. Let's also look at it from the flip side. If the supply of something is really high, but the demand for it is really low, that's going to result in a very low price. Take rubbish or trash for example. There's rubbish absolutely everywhere, but obviously no one wants it. That's why rubbish is literally worthless. You pretty much have to pay someone to take it away for you. Again, I'm going to caveat myself on this because I'm sure there are some exceptions, but most products do tend to follow this rule. So how does this apply to what's happening right now in 2020? Because obviously of the pandemic, there are people passing away, which means a lot of vacant homes. There's also people losing jobs, which means that they can't afford to make their mortgage payments, which also means more vacant homes. This is causing a huge increase in supply of homes onto the market. And obviously because people are losing jobs, that means that they're not going to have enough money to go out and buy homes, which means a massive reduction in demand as well. The Institute for Employment Studies has estimated that UK unemployment has risen over the last couple of months by 1.5 to 2 million people, or from 4 to 7.5% of the entire workforce. The Economist reckons that this figure could go as high as 6 million people unemployed in the UK, or 21% of the entire workforce. That's obviously a huge amount of people unemployed that wouldn't be able to afford their homes and would cause a giant increase in supply of homes onto the market. If you've enjoyed the video so far, be sure to give the video a like and leave a comment below. This really helps out with the YouTube algorithm. Maybe let me know what you think of the housing market and whether it is or isn't going to crash soon. But what do I think? Personally, I'm taking quite an optimistic approach, but I suppose, being a property investor, I probably would. So bear that in mind that I am a little biased here. But I personally don't think that the supply and demand equation is affected that much. Let me tell you why. In 2020, there's no subprime mortgage crisis, which means that the banks aren't running out of money. There's also no massive impact of variable rate loans kicking in. And there's no properties that have been bought recently with really risky ninja or 0% deposit loans. Actually, they're all quite safe loans that people have had to qualify for and have been stress tested against. And obviously, as the housing market is paused, the banks can't lend any money for new loans and therefore their cash is just piling up at the moment. The banks are lending out some money at the moment to small businesses, which I've talked about in other videos, so obviously their cash isn't going to be piling up too much. But the government are making all repayments on these loans for the first 12 months, which means that the bank is still going to be getting a lot of cash flow into their accounts. Therefore, I think lending is going to be in a really reasonable position after the lockdown, because obviously banks aren't going to be taking products off the shelf, and they might even add on more products onto the shelf so they can shift out some of this cash that they're holding. This obviously means that you're not going to see a reduction in demand because of the lack of availability of loans. I actually think demand might increase quite a bit. At the moment, millions and millions of people are stuck at home with nothing to do, and they're getting really bored and fed up. So I think as soon as the lockdown ends, people are going to be scrambling over each other to go and buy a new house just for a change of scenery. Or if they're working from home, instead of going to the office, they might want to upsize so they can get a house that has a home office. Therefore, I think the demand is going to come back really quickly after the lockdown. Also, from the supply side of the situation, the government are currently doing a really good job at trying to reduce unemployment. Because they've implemented furlough measures, this is keeping more people in jobs and also keeping a steady salary going. They've also said that they can and will help delay mortgage payments and delay rent payments. That means if someone has lost their job and been made redundant, it gives them the time and the opportunity to find a new job before they lose their house. At the time of making this video, the UK death toll from the pandemic is around 30,000 people. A little later in the video, I'll show you why that number of deaths won't necessarily flood the market with new properties, because actually the requirement for UK housing is around 350,000 new properties per year. Also, it's worth bearing in mind that a good portion of these deaths are from people in an older category that might not necessarily own their own home because they're living in care. So therefore, while I do see some increase in supply due to unemployment and death, I don't see a giant increase in supply because obviously of the furlough and mortgage delay measures available. Also, I think supply is probably on the underside as well at the moment, and we could probably do with a little bit more supply anyway. I also see an increase in demand from people wanting to move as soon as possible and upsize to a bigger property with their own home office. This, I think, will help keep prices stable because demand is going to increase and so is the supply a little bit, but it's not going to massively swing either way. So what are the estate agents saying? Knight Frank reckons that in 2020 we'll see a 3% decrease in the value of homes, and in 2021 we'll see a 5% increase in the value of homes. Savills reckons that in 2020 we'll see a 5% decrease in the value, and in 2021 a 5% increase in the value. Chesterton's and Lloyds Bank also reckon we'll see a 5% decrease in 2020 with a quick rebound. But as you can see, there's very little mention of, kind of destructive 20, 30, 40, 50% drops in the value of homes. But I know what you're going to be saying. Oh Tom, of course estate agents are going to say that the market's fine because that's the market that they operate in, which is definitely true and something worth remembering. They're biased, just like I am. It's like asking an alcoholic if right now is a good time to buy a beer. The answer's probably going to be yes, and that it's all fine. If you've made it this far in the video, please comment below with exactly what you think is going to happen to the market. Will it drop? By how much? Do you think it will stay sturdy? Let me know exactly what you think. Now let's look at it from a house builder's perspective. A lot of the big house builders stocks are getting absolutely destroyed in the market right now, like Taylor Wimpey or Barratt Homes or Persimmons, because obviously house builders can't manufacture houses at the moment. They're actually one of my top 5 recommended stocks to buy at the moment. So the UK government has set a requirement for 300,000 homes each year. The actual requirement is probably somewhere closer to 345,000 homes due to the increase in population and also the UK homelessness rate. In 2019, there were around 240,000 new homes produced by house builders. In 2020, this number is going to be significantly lower because obviously at the moment, house builders can't build new houses because of the lockdown. Obviously, if the lockdown continues to the end of the year, this means that there'll have only been around 2 or 3 months of proper house production. That means that if in 2019 there were 245,000 homes for 12 months, for only 2 or 3 months there's likely to be only 40 or 60,000 homes produced for the entire year. This means that the supply of homes onto the market is actually going to be really, really low, because obviously 40 or 60,000 is way lower than last year's 245,000 and also way lower than the demand of 345,000. And actually, at the current moment with 30,000 on the death toll, if all of those owned a home and those went on the market, that's only an extra 30,000 homes on top of the 40 or 60,000 produced, which is way less than the 245,000 that were produced last year. Now I think it's also important to consider a bunch of other things as well, like inflation and how that's going to affect house prices. or quantitative easing and the effect on that. And also obviously this mortgage forbearance or forgiveness and how that's going to affect your future repayments. And also the new unemployment data for April, May, June and July and how that's going to affect the supply of homes. And also tax and how that's going to have an impact. So if you want me to make a part 2 to this video that kind of updates or reconsiders my opinion based on newer data available, let me know down below and subscribe to the channel and I'll get working on a part 2. Alternatively, if you want to learn more about property investing or general investing or what's happening in the stock market, subscribe to the channel and ding the notification bell. That way you'll be alerted when I upload a new video. Cheers.